European markets on the up after Moody's keeps Spain's sovereign rating in investment-grade territory. Stocks rise, the euro hits a one-month high, and we'll have more on Spanish bonds later in the show. This is today's Market Pulse. Well, it's been a landmark day for Royal Bank of Scotland. The state-owned UK bank is to leave the government's asset protection scheme, a big step towards standing on its own 2 feet. I'm joined now from the London Stock Exchange by Simon Maughan, global financial strategist at Olive Tree Securities. Simon, this is the best news RBS has had for some time. It's out of intensive care, it's undergone the recovery treatment, and tomorrow will finally leave the hospital.
Well, that's right. And this is one of a series of things that needs to go right for Royal Bank of Scotland shares to be more attractive to investors. But it's a series of things that are all coming to a head in the current quarter. We've seen the IPO of Direct Line, which was significant. Now the exit from the asset protection scheme. And what we're really looking for is the repurchase of what's called the government's dividend access share. That gives the government preferential access to Royal Bank of Scotland cash and basically prevents them paying an ordinary dividend. If they can negotiate the repurchase of that, then we can see the way to them paying ordinary dividends, and that means ultimately a share sale back onto the market.
OK, leaving the asset protection scheme, it will save RBS some £800 million a year. Do you think this is a reason to start buying shares now?
On its own, it's probably not enough. For some time, Royal Bank has been indicating that it would attempt to leave the scheme around now, and duly it has done. It had paid the last of the premium payments to the government some time ago, and that was accruing through until this date in October. As I say, I think the most significant thing for Royal Bank will be the repurchase of the dividend access share. If that's done, then together with leaving the APS and the IPO of Direct Line, there's enough there to make a more positive case.
OK, but it's not all good news for UK banks. Only this morning we had the Bank of England Deputy Governor Paul Tucker saying that the worst may still be ahead for UK banks. Is this a view that you share?
Well, the interesting thing about the Bank of England is they're deeply concerned about the euro breaking up, not necessarily in the next 12 months or so, but further down the line. And they see that will be a huge negative for the UK banks and the marks on their positions. I don't think you'll find too many people in the markets who necessarily share that view. Most people think that it is the straitjacket of the common currency that's actually going to cause ongoing depression, and that actually the peripheral economies in particular will be greatly boosted by a breakup of the euro. So it's really it's an economic macro view, and let's face it, they don't really have any great insight into whether the euro is going to break up compared to the market or other people.
OK, Simon, thank you very much. That was Simon Maughan from Olive Tree Securities. In the deal zone today, a big one for ASML, the world's leading microchip gear maker buying US group Cymer for $2.5 billion. After over a year of collaboration, ASML says the acquisition is a natural evolution. Some analysts, though, concerned about the high price, and that's reflected in ASML's share price. It's down more than 2% so far today. Finally, today's chart point, and we take a look at the Spanish 10-year yield, which, as you can see, is plunging fast. That's after last night's downgrade that never was. Moody's keeping Spain on hold at an investment grade Baa3. There had been much speculation that a downgrade to junk status was on the cards. Spain's 10-year borrowing cost tumbling to 5.55%. That's the lowest in 6 months, and a far cry from the 7.7% only 3 months ago. Well, that's it for today's Market Pulse. With record numbers of Britons in work, yet the country still in recession, the UK's new employment minister explains the great British jobs mystery. Watch our interview with Mark Hoban on demand right now. I'm Jamie McGeever. This is Reuters.